You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
You're listening to MSE. I'm Bill Powers. Thanks for tuning in and Happy New Year. In today's show, you're going to hear from a professional trader getting an outlook for 2024. Joining me is Nick Santiago from MiningStockEducation.com. Nick, welcome back onto the show for the monthly check-in. Before we talk about 2024, let's look back at 2023. What did you get most right about 2023, and what did you get most wrong?
Well, there were a few things. So 2023, I was really looking for the markets to break down, specifically in the month of March. And we did get that breakdown, and then we had a big reversal back to the upside. So thank goodness I understand technical analysis, as I was able to guide my members and say, hey, if we hit this number here, watch for a bounce. If it holds, maybe it turns into something more. Never knowing that the central bankers were going to do what we call a stealth QE in March of 2023, when you had 3 bank failures take place in the United States. So that was something I did right, even though I got the call wrong, as I thought we were going to get a much bigger, more severe breakdown in March. But we did get a breakdown, and then the market gets reversed higher. And this is why it's so important, Bill, to really to understand charts and to know how to use technical analysis and to learn how all these patterns form and to find the different levels that the market shows you. Because had I not known that, I probably would have, been on the short side, stayed short, and got my head handed to me as the markets, reversed higher and rallied up into late July, which also I got that right as well. And I was able to tell my members at that point in time, late July, August top, and we'll probably go down into mid to late October, which is exactly what we did. And through the cycle work that I've done with my members, Advanced Cycles course, we were able to even say October 27th should be a pivotal date for a reversal. And that happened, not knowing that Jay Powell would pivot later on in December. So it was a good year overall for directional changes. There were some mishaps, as always. You're going to get some stocks wrong. Most of the stocks that I get stopped out of are usually due to earnings, because I just don't hold stocks into earnings. So if I'm down on in the trade before the earnings announcement, I just take the loss and I step aside, because I never know what's going to happen after the earnings announcement.
You've mentioned the silver trade you did a good on in 2023. Was that your most profitable trade of last year?
That was one of the most profitable trades. This year, I had some good options trades that were very, very good. But last year with the silver trade, and that's really my style, is to catch bottoms in specific groups, and then I trade the whole industry. So last year I had, in 2023 with that, in 2022, we had a really, really good move in silver. We caught the silver bottom, and we were able to trade that in the options. I think we made over 200% options, 40+% in silver itself. I bought silver bullion back then, which is still very nicely in the money. And I think we got another big silver trade coming up in 2024, but we'll wait before we get to that one, I guess.
So you look at the charts to make your decisions on buying and sells. A chart is a backward-looking endeavor. So how do you forecast what you expect in 2024 if you're looking backwards at the charts to make your decisions?
Because there are points on the chart which will show you where the institutions took action. And that's who moves markets. It's not the individual. I hate to say it. It's not me. It's not the mom and pop at home. It's the institutions, and whoever they may be. It could be, a central bank. It could be JP Morgan. It could be a bunch of different hedge funds, but it's institutional money, institutional crowds that move equities. And what you do is with charts, you watch these certain patterns. And when these patterns either consolidate or perhaps retrace or fall into certain levels, you look back on the chart and you say, well, what happened in the past is likely to happen again in the future. There's nothing new under the sun in the trading world as well as in the Bible. And you look at those patterns, and that's where you try to execute. And I've had, a lot of good calls and some not so good, but, generally when they're based off of these certain parameters, chart parameters, they're usually pretty good.
So what are the cycles saying? You apply W.D. Gann's approach. What do you see for 2024?
Well, 2024 is usually a positive year. So I know we're getting, a lot of chatter out there and a lot of predictions looking for, the world to crater this year and stocks to go down, but that isn't necessarily the case. We had a big run up in late 2023. A lot of that was, Fed induced, and, we need to work that off a little bit. But the market now this year will go into more of what I would say a sideways drift for a little bit, and then you'll get big rallies as well as some sell-offs. So, but it shouldn't be a year like we had last year. Yeah, last year was kind of exceptional with the money printing, with the stealth QE, with the promising of lowering rates, even though that hasn't happened yet. But the market works forward. It looks forward. It's always anticipating on what's going to happen. A lot of people are looking for yields to plunge. I'm not looking for that. I don't think yields on the 10-year are going much below 3.7. If anything, 3.5% would be the floor. So, we're not going to see that happen. But a lot of people are expecting that. So it's going to be one of these years where it won't be as dramatic as 2023 was. But, you have a lot of wild cards out here. You have very high debt levels. I believe debt now is 34 trillion. That's a big negative. You have an election that's coming up that could be chaos, right? So this could be a very chaotic election year as well. So you have some black swans out there, perhaps, but overall, I think we're just going to get a lot of back and forth type action, and you just got to be able to be a trader this year and be able to pick those off when those opportunities do come on the long side as well as the short side.
Okay, so I'm going to read into what you're saying, and correct me if I'm wrong. Last year, you said if you don't know what you're doing as a trader, stay out of the markets. Are you saying it could be a little more consistent, so even if you're not the most experienced, you might have opportunities to do a little better in 2024?
Yeah, I don't think we're going to get as dramatic of the moves like we had last year. Last year, I mean, these were some fast gyrations both up and down that really started in, the beginning of 2022. That's where we had that's where I had my Gann cycle peak. And I gave the members, Bullseye members at that point in time, I said tech will top out the third, fourth week of November. The S&P would top out on the first week of January. And that's exactly what happened in 2022. Now here we are 2 years later. Things have changed a lot. You got a lot more money back into the system. The central banks have, become a lot more dovish as opposed to being hawkish like they are. And that's what moves the markets really, is just liquidity. So if there's liquidity in the system, you don't want to be so bearish. If there is liquidity being removed, that's when you want to be, you want to get bearish. So right now, I got to say, I'm not very bearish this market.
Is there a singular biggest risk for 2024 that you see?
Yeah, there are several. One we mentioned already with the election. That is certainly a big risk. And if by some chance you have wars, say China going into Taiwan, that's really a bad scenario, because that will bring back inflation. Wars are terrible in general, but just the fact that will bring back inflation, unlike we've seen in the last 2 years. So, then the Fed, what do? They have to raise rates. So that would change the landscape quite a bit. And I think wars in general are inflationary. We are in war cycle period where we're going to have wars going on for the next, 10 years probably. So I would be very careful there. But if you do get a China-Taiwan scenario, I think that's a real big negative.
So you're not concerned about a financial risk in the collapse of the system, at least for 2024?
No, we still have some time before that happens. That's going to happen though, but we have some time before that takes place. So, right now that's not on the horizon this year. Not to say that it can't. Anything can happen. I would never rule out. I'm not, like I said, I'm in the interpretation business these days, not the prediction business. So I'm just going to watch the charts and go along with what the patterns tell me.
As you look back to previous years and you interpret the best trades in Q1, is there anything you can extrapolate for what you're planning to do in Q1 of this year?
Yeah, Q1 is going to be a little bit tricky because we had the big run up going into the end of the year. Powell did the big turnaround pivot where he got dovish in, mid-December. So we had such a big run up. You have to work off that excess. So, right now I do think we'll probably still get somewhat of a January effect, but it won't be as big as most people would have normally expected, because you had a lot of that run up already take place towards the latter part of 23. Now we'll wait for, a pullback and, you watch the chart patterns. And I think the first quarter of this year is going to be a little lackluster. I don't think it's going to be anything all that dramatic. What I like to do, and everybody does, is, they use this dog of the Dow theory where you go and pick out last year's Dow losers and those will be the big winners. That might be a strategy to apply this year in the beginning of the first half. I like stocks that are beaten down, that haven't run. I think those could make moves. The Russell 2000 has had a big run already. That could be something on a pullback that would be interesting. So there's going to be opportunities there. You're going to have to be a little bit selective, at least during the first quarter of this year.
What are you seeing in the small cap sector? Do you see a flow of funds picking up in this regard?
Oh, small caps made a huge recovery at the end of last year, November and December. I mean, it was just a big reversal. And when you get a reversal like that, it usually isn't over. You'll normally get another move, but we need to retrace probably almost 50% of that move before you could look at the small caps again. They're just too strong, going into the end of the year. Or you get some sort of sideways consolidation pattern for a month or two, and then that could set up for another small cap move. So I do think the small caps can participate again. I just wouldn't chase them at this level.
What commodities are you eyeing up?
Well, gold, obviously.
But you have a target for that though, right? 1800, the 18 handle?
No, 1600 handle.
Sorry, 16.
Yeah, 1600 handle would definitely be a buying opportunity for gold. Gold could break out though. If gold breaks out, you close above 2100 on a monthly basis, gold probably breaks out already. Won't even test that number. But you get anything or any gold level, 1650, 1675. I would just jump all over gold. Don't even hesitate on it. That's really the golden goose level. A couple of years ago, I was looking for 1450 to 1500. So, we never got down there. And the way gold is acting right now, it's stronger than silver. It's acting really well. You get above 2100, but you need a monthly close, Bill. If you don't have that monthly close, it could be a fake out like it was in November and even a fake out like it was in early December. So, make sure you wait for that. How these chart patterns work, you have to wait for these closing prints to take place.
What about grains? Are you in grains at all?
I'm in wheat. I'm in wheat right now. I'm going to stay in wheat for a long time. I think it's putting in a major bottom. My guess is that, when you go into war, Gan used to say, wheat is usually the place to be. And I don't see wars ending, unfortunately. I hate to say it like that. I'm not a guy that is a fan of wars. And I don't like to profit off something like that. But, wheat's low here. I mean, it's really low. And you should start to see a move up now as we get into the new year.
Nick, when you see news like what came out of Boeing with the decompression, and so then all the 737 MAXs were grounded, Boeing stock sold off. As a trader, you look at that. Do you try to profit off of maybe a bounce back, or do you short down? How do you do that?
Yeah, it'll definitely be a trade opportunity soon in Boeing off that news because the stock had such a big sell off on the news. But yeah, you look for that. Everything retraces. It doesn't matter what the catalyst is to cause it to decline. Unfortunately, fortunately, nobody was hurt in this Boeing incident. That's a real blessing. But, there's always opportunities. I look for opportunities like that. That's what I strive for, to see when there's a big news event, something gets hit. I go back. And again, Bill, I look back on the chart and I look backwards and I say, all right, where did the institutions defend this equity? And when it retrenches or retraces enough, that's where you get back in a stock like Boeing. I haven't worked out the levels yet on it, but I'll probably get on that shortly and I'll be looking at it. But yeah, that's an opportunity. There's no question about it.
And that's how you would use headlines then, right? To give you a lead to study if you want to make a trade.
Always. I look for the biggest movers of the day every single day. I want to see what's down the most. I want to see what's up the most. And I want to see if that move happened with volume and if that stock trades 1 million shares a day. If it trades 1 million shares a day, I'm pretty good at finding a level for it. So I'll go snooping around and I'll find out and I'll just wait. I have notebooks full of equities. I just wait for those levels. When those levels come in there, as long as the pattern is not broken, I jump right on those names. And that's what I prefer to do. That's what I like to do. I never, ever pay up for stocks, ever.
All right, my last question. We're only 4.5 trading days into the new year, but what was your best trade so far?
Well, I have nothing on right now except oil. I do own some oil right now.
The long or the short side?
Long. I'm long.
Oh.
I'm long oil, and I've been in oil, and I've already taken first half off the table. So I got into this trade, last month. I already took the first half off, and I haven't put anything new on. It just hasn't, been an opportunity. Markets were too high. So, I might get stopped out of my oil trade. It's not looking so tough. And as you know, I'm not an ultra bull on oil. It's just a trade here. I ultimately think oil, if it breaks these lows, is going to $55, where I will be getting more heavily invested in that commodity. But right now I have an oil trade on and I'm already in the money, and I already took first half off the table. So I'm playing with the house's money. And that's really it. I have Franco Nevada FNV. I have call options on that. And there just hasn't been a lot to do because the markets have been so overbought in so many different areas. So I look for things that are a little bit distressed. And if I could find a good level there, I'll get into that. I own some Bristol Myers calls. I like that right now. I think that's a equity that was $80 now in the 50s. So I like that one. I like that actually longer term too. So, that's what I'll be looking at going. I have a little list here, but the first month of January is always very tricky because you got a lot of selling pressure coming in for people that didn't want to take capital gains in 2023. So they may sell, you see pull back in tech now, right? So you'll get a lot of different nuances take place in that first 3 to 4 weeks. And after that, things start to normalize and you get back into the charts. And, in a few weeks, we have earnings coming up. So that'll be something after earnings to look at some opportunities there as well.
All right, I apologize. My last question wasn't my last. This will be my last question. So you mentioned staying on the sidelines and that patience that you require, you've talked previously how you have to control the emotions of greed and fear. Now, as not a newsletter writer, but someone that offers a trading service, do you feel a little pressure like you got to come up with a trade? Or how easily can you and your members not put pressure on you for a trade to where you say, hey guys, there's nothing this week for us to do?
I always tell them that, you wait for the setup on the chart. Don't ever force anything. But I always give levels out on different, I cover so much in the market, Bill, from, I'll cover, not only will I talk about the NASDAQ or the NASDAQ 100, but I'll cover, half a dozen stocks in the NASDAQ every night. I'll cover, 10 or 12 transport stocks every night. I'll cover bond yields and bonds every night. I'll cover, natural gas, oil, a bunch of other commodities, so I'm always giving them, different opportunities. But yeah, I mean, everybody, especially, it's not so much the veterans, but it's the new people. They always want to get into a million trades. They always want action. And you don't want to be that kind of person. You want to be in the right trade at the right time. Like I said, I'll use a silver example because that was such a good play. But we did so many silver stocks. We bought call options on so many of them. Early in December, or even, I should say, even in November, we had a lot of good call option plays because we knew the market was going to turn. So I like to catch the turning points, and that's where I put my trades on. Markets like this, I'm not looking to do a lot unless there's a really, perfect scenario. So yeah, when you get a little bit more experience, you're going to want to, practice being patient and wait for the setups to appear. If they're not there, so just wait it out. There's no rush, but some people need to make money all the time. That's what day trading is for. You could always make some good money every day. There's opportunities there. But when it comes to swing trading or position trading, which is longer term, you want to wait for the opportunities on the charts. And if you're not patient, honestly, you're just giving your money away to the market.
Good advice. Nick's website is inthemoneystocks.com. Go learn about his service there. If you're interested and you like what you heard, Nick, always appreciate your insights, and we'll touch base in about 30 days.
That was good, Bill.